In the previous sessions, we have discussed with financial system and stability, and we have discussed lot of stuffs. And it's a long chapter. I think we have stopped at. Yes, we also discussed this too. We are in the long journey on this chapter. Right. Today we are going to discuss about regulatory agencies. Right. When you see this slide, you can easily understand what we are going to discuss in this session. Regulations, regulators. So when I say regulators, who will come into your mind? Police, judge, lawyers, right? This kind of stuffs, and act, court. So this kind of things will come into your mind. Yes, exactly. That's what we are going to discuss. Regulators. But our scope is limited to financial institutions and financial transactions. It may be in the who is going to uh, control the activities of bank, the activities of stock market, activities of accountants, activities of stock brokers, investors. So that kind of stuffs we are going to discuss under the regulators. Who is controlling? Who is monitoring? Who is uh, who is going to punish? Who is going to punish? Who make uh, deliberately who deliberately misguide the investors, misguide the people, misguide the government. So under the financial system, now we are here, financial regulators. Under the financial regulator, uh, you know, every country has its own financial regulators. In Sri Lankan context, especially in the stock market, the regulator is Securities and Exchange Commission. Securities and Exchange Commission is the uh, regulator in case of financial market, stock market. What are the regulatory agencies? So when you heard this word, it deals with regulatory. It's linked with regulatory. It's like uh, litigation. Litigation is mean laws and enforcements. So that kind of these are the terminologies that are directly linked with law. Federal, it's mean federal. It's mean in this normally the word federal is used in UK, not USA and other countries. In Sri Lanka, we use government. India, we use government. Federal, federal mean it's the names for the central government. Federal refers the central government. State mean the provincial. In our country, province. India, so there are a lot of provinces. Andhra Pradesh, Uttar Pradesh, Tamil Nadu, Kerala, like that. State. In Sri Lankan point of view, Western province, Southern province, Eastern province, like that. So federal and state government have a myriad of agencies in place that regulate and oversee financial market and companies. But in Sri Lankan point of view, uh, central government does not involve in many aspects, especially financial markets. uh, the involvement of provincial council is not significant. But when compare with other countries like Canada, India, America, so they have a lot of states. So the state government has a lot of power, significant power, and they able to impose so many regulations. These regulations may be differ from one state to another state. So federal and right here, these agencies each have a specific range of duties and responsibilities that enable them to act independently of each other while they work to accomplish similar objectives. So when we talk about regulator, so we can find there are many institutions, many regulators in one context. Assume in Sri Lanka, when we see the regulators, the major regulator in terms of finance, Central Bank of Sri Lanka. Central Bank of Sri Lanka is the prime regulator of the financial system. In addition to that, there are many. For the stock market, Securities and Exchange Commission, Colombo Stock Exchange, Monetary and Law Act, Sri Lanka Auditing and Accounting and Auditing Standard Monitoring Board, and Registrar of Companies, Insurance Commission of Sri Lanka. So there are so many regulators. So what is the objective? Is to provide a stable financial system in the country. Here, these agencies, there are many agencies. Central Bank of Sri Lanka is one of the agencies of the government, and Securities Exchange Commission is one of the agencies. So these agencies each have their specific range of duties. So Central Bank has its own duty. Securities Exchange Commission has their own duty. A specific range of duties and responsibilities that enable them to act independently. Central Bank of Sri Lanka act independently. Securities Exchange Commission act independently. And Sri Lanka Chartered Institute of Accountants of Sri Lanka is an independent body. Right? Uh, Independently of each other while they work to accomplish similar objective. Even though there are different organization, different regulators, but the objective is congruence. Number is one single objective, overall objective is one. That is what providing a stable financial system of the country. So the goal is what? The goal of the regulator is to provide investor protection. Investor protection. Investors put their money into the market. They put their money in the form of stocks, bond, loan. Right? Sometimes the borrower may cheat the investor, abuse the money of the investor. To avoid this kind of misbehavior, the government empowers agencies so to provide investor protection and to ensure smooth functioning of financial market. This is the objective. But there are different agencies. The overall agency is to provide investor protection and to ensure smooth functioning of financial market. Function of regulatory agencies. What are the functions to achieve the common goal? Federal and state government have agencies in place that regulate functioning of financial market. In Sri Lanka, we have only one stock market, so it is under the control of the central government, not under the provincial government. So therefore we have only one, and it is regulated by the Securities and Exchange Commissions. These agencies are formed to supervise the function of all market participants to maintain the reliability of financial system. You know what the duty of Securities Exchange Commission? What they do? They supervise the function whether market is malpracticed. Right? There are some key players. They misguide the market. They misguide the investors. They misguide the price. Some of them dominate. They determine the price. If they wish, they can increase the price. If they wish, reduce the price. Market mafias, right? So if they are in absence of such regulatory agencies, what will happen? The dominance of the market mafia will increase. Then other investors, innocent investors, will will be penalized. And also the regulators supervise and control the actions of participants, investors, brokers, borrowers. There are so many participants. So what the objective is to maintain the reliability of the financial system. Reliability of the financial system. If the financial system is not reliable, what will happen? There will be a space for investors. No investors will come there. They hesitate to come and put their money into the market. There is no security. If there is no regulators and there is no reliability on the stock market, the borrowers, the companies, brokers will cheat the innocent investors. Here, supervise the function of all market participants. The market participants may be in the uh, broker institution, investors, borrowers, lenders, settlement system, extra exchange. So there are so many participants. So the regulatory agencies supervise the functions of all participants and to build confidence in investors. So if the regulators effectively monitor the function of the market, the reliability will increase, the stability of the market will increase, then many investors believe on them. So therefore, they are willing to invest their money on the stock market. The stock market development definitely will lead to the national development, national economic development. If the market is more reliable and it gives more protection for the investors, many foreign country investors are ready to come and invest into the market. When many foreign direct investment comes into the market, then there will be high potential for the economic development. And the regulators is to ensure financial stability. Stability means the low fluctuation. Sometimes it's giving high return, sometimes lower return. Some people are getting high return, some people are getting lower return. So manipulated market. So when there's an effective control of regulatories, so there will be the market will be more efficient. So therefore, the to ensure the financial stability, the function of regulator is very important. To mitigate financial crimes. So if there is no regulators, there's a chances for coming fake companies. Fake companies will participate. Fake brokers will participate. Right? They are abusing their money. They are cheating the market prices. So finally, investors will be disappointed. So in the absence of financial regulators, the financial market participants will try to cheat the other market participants. So therefore, the existence of regulatory agencies is very important and to protect investor. So if everything is good, there's a guarantee for the investors' money. So the financial regulators avoid the cheating of investors. They closely monitors the financial market participants, their misbehaviors. If they find misbehavior and they find guilty, they will punish. They will give punishment. So this kind of activities definitely protect the investors. So when we see in worldwide, there are major regulatory agencies. So we can find in internationally, Federal Reserve Bank of New York, USC, Federal Reserve Bank of New York. So the America is a big country, so therefore they have a lot of states. The state government has more power. So therefore, so New York is one of the uh, state in USA. So they have their own federal bank, Federal Reserve Bank, like central bank in Sri Lanka. Right? In our country, we call central bank. In USA, they call Reserve Bank. In Indian also call them as Reserve Bank. And Securities Exchange Commission USA. Securities Exchange Commission of USA. Like Sri Lanka, we have Securities and Exchange Commission Sri Lanka. Here, commodity feature trading, commodity future trading commissions USA. You know futures. We already discussed in the previous sessions. Futures is one of the items coming under the derivatives. Bank of England. Bank of England is a prudential regulations authority. For Australia, they have Australian Prudential Regulation Authority. In Canada, they have Canadian Securities Administrators. The same word is they have given in French language also on French. And Federal Conduct Authority and Federal Financial Market Service, Russia, right? Russian also they call it Federal, right? Federal Financial Market Services, Russia. And here, Monetary Authority of Singapore, Banco Central do Brazil, at the Brazil, uh, Banco Central of Brazil, right? So the do they use of instead of they use do. It's a French language, right? French or Spanish, right? And Hong Kong Monetary Authority, China Banking Regulatory Commission. So these are the major regulators in the globe, in the worldwide. Now we look at about Sri Lanka. So major financial regulator is Central Bank of Sri Lanka. Right, is the major one. So prime regulator in Sri Lanka is the Central Bank of Sri Lanka. And the Securities and Exchange Commission of Sri Lanka. So they are specially monitor and control the function of stock market. Colombo Stock Exchange. Colombo Stock Exchange is come under the direct supervision of Securities and Exchange Commission. Department of Registrar of Companies, Sri Lanka, and Sri Lanka Accounting and Auditing Board, Auditing Standard Board, Standard Monitoring Board. Sri Lanka Accounting Auditing Standard Monitoring Board, Insurance Regulatory Commission of Sri Lanka. So these are the major regulatory agencies. These are the examples, few examples. Now we discuss about Central Bank of Sri Lanka. In the previous chapter, we have discussed a lot about Central Bank of Sri Lanka. Now we recall some of them. Right, you recall the objectives and function of Central Bank of Sri Lanka from chapter 1. Anybody? conduct of monetary policy, conduct of exchange rate policy, management of finance, management of official international reserve, oversight the financial system, licensing, regulating and supervising of bank and selected non-financial institutions, provision of settlement facilities and regulation of the payment system, issue and distribution of national currency, and compilation, dissemination, and analysis of economic data and statistics. In addition to that, uh, they have other uh, functions like management of public debt, foreign exchange management, fund management, and custodian of employees' provident fund, facilitating financial inclusion, financial intelligence service to prevent, detect, investigate, and prosecute money laundering and terrorist financing. And in addition to that, so you see, these are the uh, mission and missions in our mother tongue. So the main objectives are the maintaining of economic and price stability and maintaining of financial system stability. Maintaining of economic and price stability and maintaining financial system stability. So this is the main objectives of Central Bank of Sri Lanka. So primary agent, the main agent of the government. The Central Bank of Sri Lanka is the bank of government. Right. Central Bank of Sri Lanka. So it consists a lot of units, and these units are empowered in by using act, different act. So the regulation and supervision of banking institution is mainly governed by the monetary law. Supervision of bank, right? To supervise, to regulate and supervise the bank, the Monetary Law Act number 58 of 149, Banking Act number 30 of 188, and the Exchange Control Act number 24 of 1953 empower. So these three acts are empower central bank to regulate and supervise banking institutions in Sri Lanka. And Finance Business Act number 42 of 2011. So this act empowers Central Bank of Sri Lanka to the regulation and supervision of finance companies. The finance business is empowering Central Bank of Sri Lanka to control, supervise finance companies, investment companies. And Finance Leasing Act number 56 of 2000. So it's controlling finance leasing establishments, finance companies, finance leasing companies, especially leasing companies. Finance Leasing Act number 56 of 2000. The regulation of supervision of primary dealers in government securities is carried out in terms of local treasury bills ordinance number 8 of 1923 and registered stock and securities ordinance 1937. So primary dealers in the government securities. So when government issues the securities, the central bank is empowered by the local treasury bill ordinance number 8 of 23 1923 and the registered stock and securities ordinance number 7 of 1937. Our country have even though our country have has a good laws, but people are manipulating. Imagine, you know, the bond scam in the last in the previous government. It's a huge scam, crime, financial crime. They abuse the government money. Anyhow, they have issued the securities, the bond based on these laws. But anyhow, people are misguide the officers, misguide the people of Sri Lanka. Now we discuss about Securities and Exchange Commission of Sri Lanka.